Let's talk about some of the important provisions of LIC Act 1956. To start with, we have Section 37. Now, the Section 37 provides that the sum that is assured by all policies issued by the Life Insurance Corporation of India, including any bonuses, okay, shall be guaranteed with regard to payment in cash by central government. Okay, so central government is going to guarantee them. That's point number one. Then we have Section 6. Now, Section 6 talks about two aspects. One is the functions of the corporation. So it says the general duty of the corporation is to carry this life insurance business, let it be in India or outside India, but it is to develop the life insurance business to the best advantage of the community. In addition, this life insurance corporation will have the powers, okay, to carry on what is known as capital redemption business, then annuity certain business or reinsurance business. They can also invest the funds of the corporation. They can acquire, hold and dispose of any property for the purpose of business, and they can advance or lend money upon security of any movable or immovable property. Okay, so that's about Section 6. Then we have Section 18 and 19. It talks about the central office. The central office will be located at Mumbai, and it can have zonal offices at Mumbai, Kolkata, Delhi, Kanpur and Chennai, and in each zone there will be division offices and branches. Okay. Then the general superintendence and direction of the corporation affairs will be carried on by executive committee consisting not more than say 5 members. Then the investment committee will advise the corporation in matters with regard to investment of funds. This committee can have maximum of 8 members, of which 4 members must be the members of corporation, and as per Section 4 of the corporation, it should consist not more than 15 members appointed by central government, and one of them nominated by them will act as a chairman. That's about Section 18 and 19. Section 20 provides that the corporation can appoint one or more person to be the managing director or directors of the corporation, and every managing director shall be the whole-time officer of the corporation, and they can exercise powers and perform duties which are entrusted or delegated to them by executive committee or corporation. Okay. Then moving on to Section 24. Now this Section 24 provides that corporation has its own fund, okay, and all the receipts should be credited to the fund and all payments should be made from that fund. Okay, that's about Section 24. Section 25 provides that the accounts of the corporation should be audited by auditors who are qualified to act as auditors of the company. I repeat, Section 25 provides that accounts of the corporation should be audited by the auditors who are qualified to act as auditors of the companies under, say, Companies Act or the law which is in force. An auditor shall be appointed by corporation with the previous approval of central government, and his remuneration shall be fixed by the corporation as the central government fixes. Okay, now every auditor who has been appointed, while performing their duties, they can have access to books, they can have access to accounts and other documents of the corporation, and auditor should submit the report to the corporation, and he should also forward the report to the central government. That's about Section 25, which is regarding audit. Then we have Section 26. This section requires that there must be an actuarial valuation at least once in every 2 years, and corporation must submit the report to the central government, that is the actuarial valuation report. Then Section 27 says that at the end of each financial year, the corporation should prepare and submit to the central government a report in which they should give an account of its activities during the previous financial year, and they should also give the planned activities for next year. That's about Section 27. Let's move on to Section 28. Now this section 28 provides that 95% or a higher percentage approved by the central government from actuarial valuation which is made as per section 26 shall be allocated, or it should be reserved for the policy holders of the corporation, and the remaining, that is the balance, should be paid to central government, or it should be utilized for those purposes which the government may determine. We also have one more section, that is section 28A, that is an insertion. That is, this section provides that if for any financial year a profit accrues from any business other than the life insurance business which is carried on by the corporation, then after making the provision for reserves and other matters for which provision is necessary or essential, the balance of profits should be paid to the central government. Okay, that's section 28A. Then finally we have section 29. Now this section 29 provides that central government can cause the report of the auditors under section 25 and report of the actuaries under section 26 and the report giving account of activities of the corporation under section 27 to be laid before both the houses of parliament, okay, as soon as maybe after those reports are received by the central government. So this is a very powerful section. That is section 29 gives power to central government to submit all three reports to be laid before both houses of parliament.